Alright, so welcome to this video. It's the final part of our entry series, and it's been a long wait. Now I believe you have gone through the video series from the first one, the type 1, the type 2, and what have you. Now obviously I had a lot of things happen, and that's why this video took so long to come out. So today I will be putting all of these things together in this channel. Now if this is your first time of watching this video or visiting our channel, I'll prescribe that you go through the other videos, because this is just a summary of what we have been doing in the last couple of videos. Now we have simplified trading to the part where you simply need to do three things. Number one, you have to work on your psychology. You need to understand why the market exists. All right, and that is super important. To know more about that, we've left a video link somewhere around this video as well. Number two, you now need to understand what direction the market would intend to go to next. Now I admit you're never going to be 100% correct, but you need to understand what market sentiment or bias that you have, and you need to hold your bias personally, because even though two traders are trading the same pattern, but no two traders will trade exactly the same, because trading is more personal than a group thing. Then finally, you need to now know how to trade your bias, TYB. You need to understand how to trade your bias. Now, luckily enough, in this channel, we have talked about how to understand bias. We'll revisit that hopefully in the next video again, putting more light on that. And we have also done how to trade bias, which we call the entry series. You want to do well to subscribe so that you will be notified when the next video on bias drops, although we have a couple of them in time past. So today we will just look at a couple of things today together. All right, so just putting them together. This is GBP USD. So let's look at how you could have traded this past couple of weeks, putting all what we have talked about together. The very first entry model we talked about here in this channel is what we call a breaker block entry. And we said those entry model has to do with when you see volatility move in the market due to news, your order block that should have sent price higher or lower depending on market direction now fails to do its function. Price returns to the order block and it becomes a breaker block, and they are very easy to spot in the market. In fact, it's one of the easiest setup or entry model you may want to think about. All right, now you can clearly see right here you have an example of a breaker block entry model. This candle right there is an order block, right? Project it in sense of time. You see it's actually function as an order block in that it sent price higher to break a market structure, then price returned back to it and broke through it like it wasn't there. What do you expect? Price should return back to it and go even lower, and that was beautifully seen in this chart right here. So the criterion for how that functions, we've talked about all of those in our videos. You can watch that one to learn about it, and that's what you see happened there. Though this didn't come all the way down to take this at first hearing, but then during the week we had price rally all towards that area here, all right, and give you that drop. Now notice there is another breaker block entry model right there. Oops, there's another breaker block entry model right there. Let's make this clear. All right, you can see it here again. I should use my tool to make it very neat for you, because these things are all over the market. Look at the breaker block. This black candle right there at the time was another block that sent price higher, but then price failed to go. It failed in its function of being an order block, right? And so it turns towards a breaker block. You see price broke past through it, returned back to it, and what do you expect? Boom, to the downside. The next entry model was a type 1 we called from liquidity grab, and from my study this one looks so beautiful, and I think most of you actually tend to gravitate towards the liquidity entry. And we had a type 1 liquidity entry, and we already have that video in this YouTube channel where we talk about price in a downtrend will move this way and then rally back to the upside, take out the previous high and continue to the downside. Type 1 you can see clearly happened here. If you're not trading off the breaker block entry, you have the type 1 price move that way, come to target a high, took it out, and boom, sell off. You sell from that area, and we've talked about all the criterions that leads to this kind of setup. So once you identify that I am bullish, I should now be looking out for the fingerprint or the best entry model that the market will present. That is why we're learning all of these things. It's not one size fits all. There are times the market will give you other opportunities. All right, other opportunities will be given in the marketplace. Then we talk about the second entry, which we call type 2 entry model. I would add like one or two more, but that will be in future videos. That is why you want to stay glued to this channel. All right, so type 2, we talked about how price in a bullish market, for example, will give you this movement, break structure, return back, take out the last low in the bullish market or the last high in a bearish market, and then expand to the upside. So what can we see here? It happened two times here. You have this low, took out that high, formed a low, returned back, took out the low, and boom. I'll do that again so it will be more clear. You have that, this, that, pulled back, comes back, and took it out. It's more like what we did here. Price comes back, takes that low, and boom. That is a type 2 entry model, although it's a buy scenario right here. Look at it again. Look at it again. Another type 2 entry model. You have price do this, boom, to the upside. Now automatically you know this low becomes protected low. Price should not come up to that low, but you see this low it creates here. That low will be used as liquidity. So price run, come back to take out that low right there, do all its money stuff, and then boom to the upside. So you see that sweep, break, forms a low, goes higher, comes back, takes out that low, and boom. All right, now what you want to do is to back test this. You can trade only one pair. For example, GBP USD gives all or more of these entries a whole lot, right? Look at this one again. Look at that high. Before that high was taken out, what lows were formed? That low here was formed. What do you expect? You expect price to come back to that low, take it out, look at an order block that was used as a springboard. Price comes back, take out that low, sprung off the other block, and boom, on your way. You are on your way. Now this new week, I don't know when you're going to be watching this video, but then you may not be watching it at the same time, but this is February 23rd. Yeah, this is February 23rd, so probably 25th rather, 25th of February. So you want to, maybe if you're watching this in years time, February 25th 2024, I am telling you, you can expect, because that high right there wasn't taken out. This is more like a bias or a projection for you who are watching this video very quick. Maybe you're watching this in a couple of years time, I don't know. But because this high wasn't taken out, we expect these lows to fail. So for a quick bias, now this low already swept that one, so this low is more like a protected low. For a quick bias, I expect this low to fail and then price to bounce back to the upside and take out that high. All right, so this already is more like an entry model. Buy from there, offset or take TP around that area. However, I am heavily bearish on GBP USD because of the higher time frame narrative. So I'm on this sell here based on higher time frame narrative right there, and I'm expecting a little pullback all the way to that area, and then the sell should be large into here. Now the reason why that bias is there on a longer time frame, all right, I'm expecting to sell up to that area and even go even lower. Okay, now you can know more about our projection by just being part of our community, our inner circle community, which covers mentorship, covers some training sessions, as the case may be. With as little as $99, you can be part of our inner circle, and you have the option of splitting that payment. You also have a one-on-one trading session, whichever way you want to take this journey to the next level. You can always reach out to us by visiting our website, or put it in the description channel, www.golfcoursefest.club/enroll. All right, I will add the link in the description channel, or you will also see it right display. You can actually visit that website and fill the form out if you want to, and I will reach out to you, or any of my team will reach out to you should you be qualified. But then you can check all our videos on this channel. You will get tons of values here, tons of values. Now if you have loved this video, you've learned a thing or two like a refresher course, please do it to hit the like, subscribe, and comment value below. I have a gift for 2 persons. All right, just do it to hit the like button, subscribe, and comment value or say a thing or two. If you have a question, do it to leave below. I will just respond to your question to make a new video for you in a coming week. Please don't forget, study hard, trade easy. Trading is not terribly difficult. The difficulty is in our mind. I wish you good luck and good trading, and I'll see you on the next video.